We are on the eve of Jerome Powell's presser and the next FOMC rate hike decision. There's a lot going on out there. We got more bank issues. Who could have seen that coming? Not Jamie Dimon, that's for sure. We got jobs reports. We got earnings coming out. The markets are down in TradFi, but they are up in crypto. Help me make sense of this all. As we get going today, please hit that like button, subscribe to our channel. Nothing that Kevin or I say is financial advice. We are not financial advisors. We're a couple of guys who love following the markets, placing our bets, seeing what pans out. But please do your own research when it comes to any buying and selling decisions. Kev, we got some jobs data this morning. We got new fear around PacWest and Western Alliance Bancorps. We got tomorrow's FOMC meeting. Where do you want to start? How are you feeling about the markets on this Tuesday?
I don't think that there's any place better to start than with the banks. I feel great today, especially knowing that the banks and the regional banks are definitely failing, and the larger institutions are doing pretty well. At least JP Morgan is from yesterday's acquisition, but definitely seeing some. I didn't expect to see 37% down for some of these motherfuckers. So it's going to be interesting going into FOMC. So let's start there.
Okay, so yesterday we had Jamie Dimon come out saying that we're near the end of this banking crisis. You and I on this show said that was a ridiculous statement. And then we less than 24 hours we're vindicated on that one, because we see two regional banks, PacWest and Western Alliance, taking huge dumps. PacWest, when I looked a little bit ago, was down 24% on the day. Western Alliance, 15% on the day. Most of this is driven by fear around deposit insurance. So those two banks released earnings, and they weren't bad, but there is a lot of concern around future deposits and the insurance from FDIC around those deposits. And that's what's leading to a lot of this. So to me, I don't understand why we're not, and this could be my lack of understanding around banking, why we're not hearing from the FDIC any certainty around what we can expect in the future if there is more banking concern. I think that would fix a little bit of this, maybe. But overall, we're starting to see this consolidation into the bigger banks. We saw, JP Morgan shouldn't have more than 10% of deposits on the books, but with yesterday's acquisition of First Republic, now they do. So are we going to continue to see this? Like, are we, the Biden administration has been like, we're not a fan of big banks, blah, 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 but they were totally okay and basically begged Chase to take over First Republic. So are we going to see more of this in the future? Like I said, we're not banking experts, but I would love to kind of get a better idea of what to expect moving forward. And I don't even know if the banking experts know what to expect moving forward. I think everyone's just kind of winging it right now.
Yeah, I was about to say, I almost sent out a tweet this morning where it was about how most people in crypto don't necessarily know how to manage, funds, preserve wealth going into a financial crisis, but neither do banks. Nobody knows anything right now. And so you and me are probably just as in the know as some of these banks are. And I don't think that a lot of these banks that are, flying under the radar today aren't, over the next few weeks, months, maybe they're going to start seeing some of that light shine down on them. It seems like the big banks are the ones that are being most profitable through this. In times of panic, it seems like those rules are just tossed aside because they just need to, resolve the issue as fast as possible.
Let's talk about what Ace just typed out here for a second, real quick, because this is so true and it's terrifying how few people understand what is going on and the potential ramifications of what is going on. Because most people, at least near me, use bigger banks. They use Chase, they use Bank of America, but a vast majority of people have no clue that there are all these issues happening with banks. And maybe they'll get wise to it if things get worse. Maybe they won't. But I think the majority of people still think that, okay, the price of eggs are up and the price of milk is up. That's all that's going on. I don't need to worry about anything else. But that could not be further from the truth.
Yeah, that's 100% true. Again, I'm pretty young, so a lot of my friends aren't, posting about this shit on Twitter and Instagram or any of this stuff, TikTok. They're just dancing. So I think a lot of people are just kind of out of sight, out of mind. Oh, that doesn't concern me. I think my money's safe. It's a bank, FDIC insured. But again, what if every bank collapses? What if everyone tries to draw all their money out at one time? Where's that money going to come from? It's going to be really interesting to see, but I don't think people know the extent of how this is going to affect them 3 to 4 to 6 months down the line. Your bank might not exist, from 6 months from this date. So it's really interesting to see that people aren't, again, people just probably don't care unless you're in the game like we are. It's probably going to be a rude awakening for a lot of people.
So the conspiracy theorist in me thinks that it's awfully convenient that this is happening the day before the FOMC decision and before Powell speaks.
Yeah.
Because I've been under the thought for a while that to get inflation down, they need to hike by 50 this time or hike again next time. And the consensus is that it's 25 tomorrow. All the probabilities show it's like a 95% chance it's gonna be 25 tomorrow. It's pretty much a guaranteed thing. But my thought has been it should be higher or they should hike again in the next one because inflation isn't coming down as well as everyone wants to make it out like it is. And to me, the timing of this is awful peculiar. I don't believe in coincidences.
No.
The timing of this to me signals we want to get more fear around banks to force the Fed's hand to not hike anymore so that then they can eventually pivot and make money cheaper to borrow. Like that is where my belief is at the moment, that there's a lot of manipulation going on here. Call me a conspiracy theorist, but that is just what this kind of looks like to me.
That's interesting. I didn't think you're going to go that route with it. I'm the conspiracy theorist, and I'm under the belief that everything is all in the same system. So the Fed is just as equally in bed with the banks. But that's just a conspiracy theorist to me. If we're looking at the data and stuff like that, I do think that we do need to see higher interest rates. We need to see them go up. We're not doing enough right now. And if we want to keep adding 25, we're going to be here for 2-3 years, waiting for inflation to finally come down to that 2% terminal rate. Right now, maybe these banks are collapsing. Maybe, people are shorting the market, hoping that everything, looks good enough for the Fed to start pausing. But I don't know, man, nothing looks good. I feel like I'm walking into, what's a shitty restaurant, like a Ruby Tuesday or something like that. I feel like I'm walking into a Ruby Tuesday and I'm looking at the menu and everything looks like shit.
Yeah. Along those lines, we got the latest round of jobs data this morning. The JOLTS report came out. Job openings have decreased, but it's still at 9.6 million, down from 10 million in the last one. One thing we've seen, and this is to be expected, was the number of layoffs increased from 1.55 to 1.8 million. We're getting more and more news that AI is going to impact the job market moving forward. I believe it was IBM who stated that they're expecting to need 7,800 less jobs in the future based purely around AI, and that's just one company. So we're seeing layoffs happening. We're seeing the expectation for more layoffs in the future. One area I've heard that people talk about is like the need for a universal basic income as a result of AI taking so many jobs and the impact that could have on the money printers and inflation. It's just a really weird time to try to figure out how to position yourself. But like we said, the job market is still incredibly strong. Yeah. The labor force participation rate is still lower, by a lot, because so many people are out there gaming the system and having figured out how, what they can do to get assistance so that they don't have to go back to work, which if that changes, the unemployment rate could go down even further. So it's a really, really weird time to try to figure out what exactly the Fed, can and should do, because at this point, all they've tried is raising rates, and it doesn't seem to be going as well as expected.
Oh yeah, 100%. There's even an argument to be said here that, again, when we looked back at 2008, we always bring this up, but unemployment rose to 10% at the peak, right? And there was 8.6 million jobs lost within those 18 months that the recession lasted. But looking at this now, we've had 15 years since 2008 began, once the layoffs started to start rolling out. Is there a good chance that there's a lot more people in the workforce now than there were back then? There's a lot more jobs that are created than there were back then? It's probably a good chance. And most likely a lot of companies, once the money printer started going, people started getting overpaid, overhired. And now you just have this mass supply of, employers that you don't necessarily need. They're all doing kind of the same thing, and they're just doing a little bit less of it than what one person probably could manage themselves. So there's a good chance that unemployment could rise a shit ton, man. And again, the IBM thing, that's something that you and I have been talking about for, 2-3 weeks now, saying that once we did our recession show about recruiting and staffing, a lot of middle management positions were eliminated back in 2010. When they started hiring people back, people who were making in that middle management position, which was like 18 to 20 the time, started working the minimum wage jobs, which was like the lower entry level. So if a huge ton of those are eliminated and you're seeing, AI potentially taking over a lot of those jobs, and right now labor market's still strong, we might have a long way to go. And again, you might start to see people who are just absolutely, to most companies, for lack of a better word, useless. Like it's really scary to see. And maybe the UBI thing is the answer, but again, that's kind of scary to me because then it's like, how do you trade with UBI? Do you know what I mean? Again, it's an entirely different beast, but it's so fucked up. And I'm kind of excited, but I'm also like scared because I know this is just going to hurt so many people and it's going to change a lot of the way the financial world works going forward. So just a thought. That's my conspiracy theory going forward, but like just insane to me.
Yep. Let's talk about tomorrow's FOMC decision and presser because you and I are going to go live for the show after Jay Powell gets done talking because I want to hear everything he has to say. My prediction, I mean, the 25 basis points, that's not stepping out on a ledge at all. That is pretty much guaranteed. I think he is going to come out and he is going to sound incredibly hawkish. Like, I think this may be, we had, what was it? The Jackson Hole one was one of his more hawkish pressers that he's done in quite a while. I think this could rival that one, if not even worse. Like, I think he knows. But that being said, like, do the markets care? Because the markets have priced in that they're not going to hike anymore. And the bank fears from today, I think, are going to kind of solidify that. So I don't know what to expect the markets to do. Like, initially, I was thinking we could see something similar to the last time where the markets popped in the half hour between the announcement and when Powell speaks, because that half hour is insignificant. Like, whatever the market does as a result of the announcement doesn't really matter. It's already priced in for the most part. What's going to happen in the past, it's been what Powell has said has either spooked or excited the market. But I don't know what he's going to say tomorrow. Like, I think there's a lot of unknowns because there isn't a clear path for the Fed right now like there has been for the last 10 months. Like, the last 10 months, we got to keep raising. We're going to keep raising. We're going to keep raising. Now there's no one knows what to do. Like, we are in uncharted territory. The boat does not seem to really have a whole lot of direction at the moment.
Yeah, it's insane. I'm gonna go on a limb just because I'm not always right, but sometimes I get a hunch and I'm right, and I'm like 100% spot on. I'm gonna say we're going back to September 2022. I think that's how the markets are gonna react. I've seen a lot of
like September lows. Like, it's gonna crash down to September 2022 or up.
Oh no, September 2022 when they raised rates, market dropped like 1,000 points in the fucking Dow. Crypto was just bloodbath. I think that's what's going to happen. Personally, I think that we're going to see maybe we see a little bit of a scam pump right after the 25 comes in, but then I think that it's gone on so long that even market makers know that, hey, we can't sustain this. There's more money if the prices go down than if it goes up. And again, I've been talking about how much supply has been coming onto these exchanges. I think they're just waiting for the perfect opportunity. So we're seeing a little bit of a pump right now going up because of, like you said, the banking fears. People are like, oh, I don't know where to put my money. Let me put it in the crypto. Also, for the past 2 weeks, there's been literally billions of dollars that have been going on to Binance, been going on to Coinbase, going on to OKX, Kraken. Hasn't been sold yet. So I'm really interested to see how this plays out. Again, I always say it's when you least expect it. Maybe it isn't. Maybe I'm wrong on that, but I think that we're going to see some really bad red tomorrow. If not tomorrow, it's going to come in right after the close or something. I expect red this week, though, like massive.
Interesting. Okay. I mean, we've been bearish for a while. I want to at some point try to poke holes in this because it does seem like, I don't know, man, everyone is bearish for the most part right now. Outside of people who are trading meme coins at the moment, everyone seems bearish. Where could they be wrong? What sort of events could happen? And maybe it's just those unforeseen things that we can't possibly predict. One thing I do want to discuss real quick, and it's something that, oh dear, Ace, there it is. Why should people care about interest rate decisions?
Because it's going to kill them, a few months down the line.
Right.
It's hard
so I bring this up because I hear people all the time, like on Twitter, and when I talk to you, like in real life, like, oh, well, why should I care about, a 0.25% increase in interest rates? That doesn't affect me. Why should people care about that, Kevin?
Okay. You need to, try and get a loan for your house. Try and get a car. Try and pay your credit card bill. buying anything. This affects you on the consumer level just as much as it affects, the banks in terms of lending and borrowing. Uh, the higher these go, we obviously see how the markets react and the economy reacts afterwards. Last time we've had rates this high was literally 2007, 2008. And what we see? Massive, economic collapse. The only difference between then and now is they raised 25 basis points all the way up to get there. We've raised 75, 50, 50, 75 all the way up in a matter of a year. I think the difference between where we started and where we are now is like 6,000% in terms of how much they raised the rate hikes. So yeah, exactly. It affects all of us. People just don't realize it flows downhill back to the consumer 100%. And, this is not something, and that's the bad thing about consumers. Like, again, Ace brought up a great point about how not many of them know about what's going on in the banking crisis. And a lot of people don't know what's going on with these interest rate hikes. There's a lot of financial literacy there's a lack of financial literacy in a lot of people. And, if you're not in the markets, you're not worrying about this stuff, you're not trying to preserve wealth or grow your wealth, you're not going to know how much this is going to impact everything for probably a good amount of time. Like once they pivot, tends to be the time when the markets absolutely crash. But yeah, this is something that you shouldn't dismiss. Maybe I didn't explain that as well, but maybe you
I'll
can answer.
I'll try to make it as simple as possible. The people who you buy goods and services from are impacted by the interest rate hikes. It costs them more money to do business, but they're not going to want to cut back on their profit or their margin. So therefore, you are going to have to pay more for their goods and services. Same
Good
thing
one.
when it comes to credit. If you got a credit card and you're carrying a credit card balance, well, guess what? That percentage that you pay each month for what you don't pay off fully is impacted by the interest rates, and it's going to go up and it's going to compound more and more over time. And that debt that you have is going to go higher and higher and higher. So the interest rates that the Fed, the FOMC is constantly changing or changing, 8 times a year, it impacts every part of day-to-day life for the vast majority of people.
Absolutely. Yeah, it's supply and demand, man. The money supply is shrinking, then the demand's gonna be higher, price is gonna be a lot higher. So that's just the way it works. It's gonna be like that until everything collapses. Maybe I'm just all Mr. Doom and Gloom, but it's just what it is, man. Something's got to break at some point. We're at a boiling point, and once it breaks, then maybe we can reset to going back to normal. But these interest rates extremely high, probably going to go up a little bit higher. Just we'll see tomorrow, but that's what I think.
Yeah, man, a surprise 50 pointer. Like if Powell came out, if they came out and were like, nope, we're doing 50, buckle up. That would be the markets would just tank. Like that
Yeah.
would be that would that might be a buy opportunity because I think that could be a huge like or in the coming days, maybe not financial advice, blah, blah, blah. It's not gonna happen. They're doing 25. Powell, we've said before on the show that Powell always tips his hand. He says exactly what he means. They're going to keep looking at data. And that's why I don't think we can count out any future rate hikes as well.
Mm-hmm.
Like Powell is very much, he is stuck in his way. He is we're going to act based on what the data tells us. He has said that ad nauseum. And if we see an unemployment report on Friday that shows that unemployment is still sticky, if we see CPI and PPI next week, because those both come out next week, that show that those numbers aren't really budging, we're going to see more rate hikes priced in for the June meeting. I don't think there's a July one, but there's an August one. We're going to see more rate hikes start to get priced in, and that could lead to even more bank issues. Like it's a snowball effect. The Fed hasn't broken anything yet. Okay, the banking sector isn't broken. It's getting beat up, but it's not broken.
Yeah.
And the Fed has said that's kind of been the thought process. Is something has to break to cause the Fed to say, okay, we're going to take our foot off the gas. That hasn't happened yet.
Yeah, it's gonna be really interesting to see what that is that causes them to to relax, to lay back on some of these rate hikes, to start pulling them back. But I don't know, man. Banking industry seems like that's the one that might be next to go. Who knows? Maybe it's commercial real estate. It's coming, man. It's just we've seen this play out for a good amount of time. I think a lot of people are just really tired of a market being so down that we got a really good relief rally this year, but it can't go up forever, and we're not seeing the money come in. I don't see most of this money that's currently in the space being here for I don't know 6 months or so. We're going in the summer, volumes are low. I don't anticipate this being a very positive time of the year.
Yeah, we talk about The Big Short a lot. I
Yeah.
watched it on my flight to Austin,
Oh, nice.
but I mean, it took those guys a long time before they were right. But
Yeah.
they held to their position, they stuck to their guns, whatever you want to say, and eventually they were right and they made a killing. I am not like I don't know what market to short. I'm not really doing that. I don't play that game, but I'm going to continue to hold my cash position, try to add to it as much as possible because I do think it's going to come crumbling down, and when it does so, I want to try to be there to pick up some of the pieces.
I'm going to tell you what industry, if yeah, you could short potentially everything.
Everything.
I mean, it just seems like everything is in the shitter, man. I mean, even some that are putting in all-time highs, I'm just like, what's going on here? This thing is so overbought. Everything below them that props the price up, things that benefit them aren't going to be there. Contracts that are holding some of these companies up, if the contracts go south, or there's not as many as there once was, obviously that's going to affect everyone else that was doing business with them. So, that's the one thing I'm looking at. I'm seeing absolutely no industry that is safe from any of this right now. Maybe medical. It's the only one I'll always say that seems pretty safe. People are always dying and getting sick. They need to get some treatment. But I think a lot of people are going to be feeling pretty sick once this market fucking drops.
Yeah. Yeah, that is for sure. It's been a weird day. We saw everything take a big dump earlier. The TradFi markets are clawing back right now as we head into the final 40 minutes of the trading day. Dow was down close to 600 at one point. Now it's only down 350.
Suckers.
It's the damn VIX. I swear. We talked about this yesterday when it was sub 16, and we saw it pop up to just under 20 when we got news around the banks, and now it's starting to recover. Nothing has changed in the last few hours around the banks, but people are just like, oh yeah, it's no big deal. God, it's I don't want to put too much emphasis on one data point, but it's just been such a historically reliable data point around what the VIX has to get to for us to exit a bear market that until we exit one without seeing that number go up into the 40s, I'm not going to believe that we're out of the bear market yet.
I don't believe for a second that the S&P is done with its volatility. It's just that I see the S&P being so extremely overbought, and it's hitting resistance. We're seeing it hit resistance. The Dow, Nasdaq. The Dow can't break above 3,400 or 34,000. Every time it gets above 34,000, maybe it wicks up to 34,376, and the next thing you know, it's straight down, straight down. It's hit its head so many times over the past few months. And again, S&P, all these indices have been doing this. It's for the VIX to be this low. I just think it's like a slingshot, man. This thing is pulled all the way back and it's just waiting to be let go. And once it does, it's going to be 40, 60, 80. I can't wait for it because, again, it's going to feel nice. Just as, people who are always saying the VIX never is a terrible indicator. Yeah, it's a terrible indicator until it proves that, once there's volatility in the markets, that thing shoots straight up. So,
Yeah, same with S&P. Like it's been hitting its head against 4,200.
yep.
If it couldn't break through back in February, it couldn't break through this time. The last time we saw it break through 4,200 was last July. It went up to 44 almost for a bit, and then came right back down. So we are hitting these levels of resistance. It's been a great rebound. It's been a great recovery. Like if you bought a lot of these big tech stocks in November, December, January, and you're up significantly, not financial advice. There's tax, questions you got to ask yourself. But man, it feels like a good time to take some profit off the table for sure.
Yeah. Again, that short squeeze, I did not expect it to be that impressive. It was a pretty good move to the upside that we saw this year. Again, I was so bearish that I probably underestimated how high it could go. I definitely did that. My apologies. But when I look at this now and I see how low the volumes are across the board, I'm just like, where's this money? Where's the money coming in to push everything up? I don't see it, man. And that's the scary thing. And that's why we're seeing resistance, because there's just a sell wall right there at that 42 level. Every time the price gets up, people who have enough money or have a good position, like, okay, let's just sell some of this, or let's just short some of this right here.
All right. So tomorrow we're talking about Jay Powell and the Fed and everything.
Yeah.
Thursday, we don't have as much to talk about. So we got 2 days. I'm going to give each of us homework. We're going to go out and we're going to try to find our best bull case for the current market and see if we can poke holes in our bearish thesis, because right now everyone's bearish, which, we need to try to look for what other people aren't. So I want to try to see if we can find any area of the markets where we can be bullish right now. So that is homework for the next 2 days. There's got to be something out there. I mean, there
I
has
have
to be.
one right
There's okay. Well, don't wait till Thursday. Don't
I know, but it's
don't say
such
it yet.
it's so weak. But yeah,
Well,
Thursday will reveal it.
maybe try to find something else to support that, or find a whole other different reason that you could be bullish, because we do need to be constantly reassessing, making sure that the thesis that we have is the right one, and trying to poke holes in it and see where we could be wrong. There are plenty of moon boys all over Twitter, but those are moon boys that don't have those are moon boys who don't have any rationale behind it. I want us to actually not be like them and have legitimate, a thought process behind it, besides the fact that we desperately want it to, because we need our Twitter or our YouTube engagement to go up. If we're here and it's you, me, Ace, Riggs, Mr. House, Bundy, whoever else watches our show for the next year, that's fine. We're not going to change our thesis just to try to get more views, but I want to be objective about it.
Yeah, definitely. I agree. But the one thing I don't see, again, I'm so technical. So when I look at the technicals, there's not a lot for me to really get excited about. I have to probably look a little bit more macro in terms of, all right, what are companies doing? What are some things that we see from historical trends that once we get to a certain point within a bear market, is it most likely the best opportunity for a bull case? Or what's the risk reward ratio from now and then?
Crypto technicals are a lot different than TradFi macro stuff.
For sure, yeah.
There's crypto. I don't understand the TA side of things. It makes more sense to me when it comes to crypto. I get the technical part of it when it comes to the TradFi stuff, but there I also see there is a different game being played as well. So there's just a lot of different ways that we can and should be viewing this to make sure that we're giving ourselves the best opportunity to make money in this market.
Definitely. I agree with that.
Okay. All right. We're coming up on a half hour. Is there anything worth looking at in the charts, or do you think we're good for today? I see, BTC dominance back up a little bit. Bitcoin is seeing a little bit of a rally at the moment, back up near 29K. So seeing a little bit of positive movement there. Is there anything that you think is worth looking into in the charts?
Yeah, I just want to look. We're going to go through three things real quick. We're looking at Bitcoin right here. You see that we're seeing this green candle. Again, we're extremely low on volume right now. Let me see if I can pull up the volume chart. You can't even really see the volume compared to where we were. This is on the daily, but the price is pushing up right now. Not necessarily a great thing to look at. We keep hitting, found support on this 50 moving average on the daily. But if we look at the weekly real quick, we wicked all the way down here, and then we just shot straight up. And, right now we're down a little bit from where I think we opened, but this thing is going to be trading pretty volatile for the next few days. I wouldn't be surprised if we see another push maybe towards 30K, but I do think that sell wall at 30K is going to be going to send this thing straight back down. So we're going to keep an eye on that. But again, like you said, Bitcoin dominance is pushing up. Yesterday, I was talking how Bitcoin dominance, if it didn't get above a certain level, if it just kept on going down in this trend and retested this 46 level, that might be the end of it. But Bitcoin dominance is shooting up. So that's encouraging to see if you are a bear, because, I think that we're getting close to that 30K sell wall. But then again, Bitcoin dominance is still around. So if we can get back up higher than this, maybe even there's a little bit of a squeeze tomorrow, we could see 49 again for BTC dominance, and then that might be catastrophic for the markets entirely. Then the other thing you got to keep an eye on is the DXY. So the DXY has been trading in this, ascending triangle here, and these are bullish patterns. We came in, we found rejection, now we're just trading back and forth right here in this little area. We were above it. We were way above it today. If we could pull up the 4-hourly. We shot up, we found the 200 EMA on the 4-hour, and then we got rejected from it, and we're correcting down. It looks like the 4-hourly is going to be oversold maybe the next close or two, but point is we're staying pretty strong here. We'll probably find some support on the 50 moving average on the 4-hourly, and we're getting closer and closer to the end of this triangle. So maybe it's the FOMC meeting tomorrow, maybe it's Powell speaking, but I do think that we are going to break out of this and move to the upside. And if we do break out, I think it's going to be a pretty good candle that's going to be green, and you're going to start seeing some of the risk assets just bleeding absolute red. So that's what I'm seeing for the three things that are most important for me right now going into FOMC. Just absolutely just keeping an eye on some of these, because these are things that could tell you how price action could be seen over the next few days, where Bitcoin's coming down from being extremely overbought. We got the DXY on the weekly that's extremely oversold and undervalued, and we have these patterns, both an ascending triangle and a double bottom pattern. I mean, I wouldn't be surprised if we start to see this thing break out and then, find some support on here before we start moving our way up, like we talked about yesterday. And Bitcoin dominance, let's see if it's got one more last leg in it. I think there's a good chance that it, could push up just a little bit more, maybe to 49, and we get rejected right around 49. That'd be the right around here. And if Bitcoin is 30K, 49, then we're getting tons of sell volume coming in around that 30K level, and the DXY is pumping, well, then all bets are off. That thing is probably going to be pretty negative for price action. So again, tomorrow is going to be an extremely volatile day. I think there's going to be massive liquidations in both directions. I'm not telling people to trade tomorrow at all. Obviously, I think we are going back to the September 2022 where we're going to see infinity candles where it's just up, down, up, down. And
yeah, trading the FOMC is such a fool's errand.
I have positions right now, but the difference between what I think a lot of people make the mistake of when they go into this is that they're using too high of leverage. My leverage is extremely low, so I make sure that my liquidation levels are at a reasonable level, and they're not going to get wiped out 5 seconds after I, enter my
and it's gone
trading code. Exactly. As soon as you go in, you get an email from KuCoin or Binance saying, "Sorry, you've been liquidated." But it happens.
I just hit enter.
Mom, what the fuck?
What the fuck? So Ace mentioned gold over 2K. That did take a nice little pump. Another thing I want to bring up before we wrap it for the day is oil. So we had news out of Russia that oil exports jumped over 4 million barrels a day last week. So no sign that they're actually living up to their threat of cutting output. So that's been an interesting one. And that could be something where we poke a hole in our inflation thesis. You and I were both under the belief that if OPEC Plus lived up to the promise that they were going to be cutting back on oil output, that would drive the price of everything else up. If that's not the case, that is fairly bullish for inflation. I know the Fed removes energy, yada, yada, yada. But, that could be one thing where if Russia's like, yeah, no, we can't afford to cut our oil production, we got to keep doing it, and all the other OPEC Plus countries do the same, that could be a bullish sign for the markets in the months ahead.
For sure. Definitely something we need to keep an eye on, especially going into the summer. Maybe they just want to make some money, and wouldn't be a bad idea to do that, especially with people traveling in the summer.
Yeah, for sure. So that is one area where I could see it being bullish, but you and I are going to look at it individually a little bit more. We'll talk about it on Thursday, and we'll see if we can find any bullish indicators for the months ahead, especially after we hear Jay Powell talk tomorrow. I just want him to come out and put the fear of God into the markets. I don't think he'll do it. I don't think he has it in him to do it, but I would love to see it happen. Like, I want him to come out there, like pyrotechnics, WWF music blaring. He rips his shirt off when he gets up to the stand and just like, you dumb sons of bitches, like just absolutely tears people apart. But it's not going to happen because, it's Jerome Powell, needs the head of the Fed. Now, if I would do like that, I think that could be some funny content, like what Jay Powell says versus what he wants to say.
Exactly. Dude, I was thinking like instantly either Stone Cold Steve Austin, that glass shattering coming right out, Jay Powell with a can of beer just walking down the ramp, or just do some Motorhead and do the Triple H entrance. Either one. Both iconic.
That would be amazing. All right. That is going to wrap it up for today's show. We'll be back tomorrow. Start time, kind of TBA, because basically as soon as Powell talks, like sometimes it's a 30-minute presser, sometimes it's 45. But as soon as he is done talking, we will go live, kind of break down what he said, translate it from Jay Powell into normal talk, and we'll go from there. So thank you, everybody, for watching. Really appreciate it. Hit that like button. Subscribe to our channel, share us out. We love making content for the people who watch it. Appreciate all your support. Ace, Mr. House, everyone I mentioned earlier. You guys are the best. So we'll be back tomorrow. Have an awesome day, everybody. We will see you next time.
Take care, everyone. Be safe.